Oh, another thing that we talked about with JT is you cannot shop around for insurance. No matter how many times people tell you need to shop around, you cannot do it
Your broker
because
can shop around for insurance.
your broker can shop around, but you personally cannot. If you shop around, you're shopping around for a broker. And he was talking about if you have company A, B, and C for the best, what, property insurance, umbrella insurance, and general liability, and then you go to another broker, they might have to go to different companies because they lock themselves out because there's already a broker on file for that property in question.
Welcome to the Ironclad Underwriting Podcast, where precision meets performance in commercial real estate. I'm your host, Jason Williams, and every week we deep dive into the strategies and systems and stories behind rock solid underwriting. Whether you're a seasoned analyst, an up and coming investor, or a commercial real estate professional looking to sharpen your edge, this show is your front row seat to expert insights, emerging trends, and real world underwriting tactics that stand the test of time and scrutiny. From market assumptions to debt structuring, cap rates to cash flow, we're cutting through the noise and getting to the numbers that matter. So sharpen your pencils and fire up those models. Let's get to work. This is Ironclad Underwriting.
Hey, everybody, welcome to this episode of the Ironclad Underwriting Podcast. I'm your host, Jason Williams, and I got my co host, good friend, business partner, Frank. How are you doing, Frank?
Good, sir. Ready to talk about one of my favorite topics.
Yeah, so last episode we had our insurance broker, JT Lynch from Ramey King on, and he was a wealth of knowledge, and we probably could have talked for a few more hours on insurance alone just because there's so many stories and so many nuances to insurance. But now Frank and I are going to continue that insurance topic into this little mini series that we're doing now on insurance. And today we're going to jump into how to underwrite insurance costs accurately. I mean, we talked a little bit about how to get numbers from JT last week, but we'll dive a little bit deeper in this episode. So, you ready to jump in, Frank?
I am ready.
Right. So, if you did not listen to last episode, one of the major takeaways is you need an insurance broker. One, because it's hard to buy insurance as an owner, and I'm talking commercial insurance, commercial properties, multifamily, for like your houses. If you have multiple single family homes, that's one thing. But if you are looking for commercial real estate, multifamily, you will need a broker. You'll need a good relationship with a broker. One, brokers will bat for you. They will shop around and get you the best rates, premiums, deductibles, all the nuances that go into insurance. And so when you have that relationship with a broker, they will help you actually get you the best underwriting costs or insurance costs for your underwriting. So, like I said, where do you actually get these numbers? You get them from your broker. How do you get these numbers? Well, what I do whenever I need a soft quote or an indication, and that is just say, hey, this is what we think insurance will be. It will be within 79,000 per year to maybe 98,000 or so. It'll give you a range, and the way that they give you that range is from like kind properties in your area that they have insurance on.
So, Jason, a
Insurance,
couple things. One, you don't get it from what the seller is paying for insurance. Uh,
no,
be-
you do not get it from the seller.
I
Uh,
mean, you can start with that, but that's really not a good number because usually they've had the same insurance for many years. They might have a package deal where they have a bunch of different properties that they're getting a discount, or they're underinsured. There's a lot of
or
reasons why you have to be careful with that.
or
Just
they can
like,
have a master policy or something like that
yeah, yeah,
where all their properties are covered under a single policy or something like that. And
yeah,
so,
just like a pro forma number, I don't like either. You might use it to start until you talk to your broker, but you really have to make sure. I try to make sure you talk to a broker before you make an offer.
oh, you definitely need to talk to a broker before you make an offer. You need to be talking to a broker whenever you start deep diving into your underwriting. I'm not talking about the 2-minute underwriting where you just say expenses are this, income is this, my valuation is this. No, once you start deep diving in, you have your T12, you have your rent roll, you have your OM, and you're actually going in and using those. That's when you want to start talking to a broker. Definitely don't use the T12 numbers. Definitely don't use the broker, the selling broker, the real estate broker's OM
Yeah.
numbers.
Yeah.
Because most of the time those are off. Even though they claim that they're accurate, they're usually off. So
Yeah,
if you
just like
have,
different parts of the country, different markets are going to have different numbers. So I mean, if you're buying, so we've bought stuff in Idaho and New Mexico, but then we also buy stuff in Texas and Rhode Island. The cost per door of rents are quite different.
yeah, and Texas, we were getting up to 1,100 a door. Now we're back down to 800 a door this year, which was like a huge relief. We
That's
weren't
awesome.
expecting. But in Idaho, I've seen numbers, and I've had people question these numbers as low as what 350, 400 a door.
Yep, I make them underwrite at 400 a door, but there was one quote we got at 275 a door.
And it was an actual quote from an
Yep.
insurance broker. So
Yep.
So once you get a rent roll and a T12 and an OM and you're deep diving into the property, just send that broker an email. Say, hey, this is the T12 rent roll OM, same information you have, and they'll work in parallel and they'll send you an indication saying, hey, this is what I can expect to pay for insurance. Will it be exact? No. Will it be close? Yes. Will it be close enough for you to do your analysis? More than likely. Um, you're not going to get an actual hard quote until you're under contract, until you've done your due diligence, until they've gone and inspected the property. They'll come back and then they'll give you a hard quote on what the insurance is actually going to be. But for the preliminary, just send them the information you have and they'll get back with you. Depending on your broker, JT usually get back with me within a day or two. So, but now he has like a website where you can go to and upload all that and get that information in a matter of minutes. So that's pretty cool. One thing you do need to do is disclose to your broker everything you know about the property. Yes, it may make your insurance go up, but that insurance was going to go up regardless because whenever they send an inspector out, they're going to inspect it and know it anyway. And so if you have your stab locks in all your units and you don't tell them and they don't ask, they're going to assume they're just going to be GE electrical panels. And then whenever they discover their stab locks, they're like, oh, wait a minute. And then now your premium went up 25%, something like that.
If you're not honest, you're going to end up paying for it later.
Yeah. And yeah, it sucks. Like, don't tell them that. Don't tell them that. No. It's like you have to tell them because they're gonna find out anyway. Even if there's like, we were talking about a property that we looked at that one of the buildings burnt down. There was no previous insurance claim or anything, so there was no history for insurance. But when the inspector would have walked out there, he would have seen, hey, this building is burnt up because they cordoned it off with yellow caution tape and it was in the newspaper, so they're going to find it whenever they do their due diligence. So they're going to know, hey, this building burnt up, there's this much damage roughly, and now your premium is going up 56% or whatever. So need to let them know up front, because the worst that can happen is they give you a number that's way too high and that doesn't make the deal work.
Yeah, better to kill the deal.
It's better to find out now rather than after you close and now your insurance is due and now you have to spend another $250,000 to scrape a building or another $1.5 million to build it back up that you weren't planning on doing. And so let your insurance broker know everything. And letting your broker know does not necessarily mean the insurance company is going to know. Just because you share information with him or that person doesn't mean he's going to carry it on and you're telling the insurance company. So, And that's one thing you can do is you can confide in your broker. He can give you guidance into how the best path forward without like really affecting your premiums. Because he gave a story once where there was a guy who called up his insurance company, say, "Hey, I want to make a claim," and they're like, "Well, the deductible's this." He's like, "Well, I don't want to make a claim then because the damages were less than the deductible." And they're like, "Okay, that's fine." And the next thing you know is his premiums increased because they found out there was damage.
That's crazy to me.
Yeah. So insurance is can be kind of hokey. Insurance is the thing that you pay for that you hope you ever never have to use. So I think that's the only thing we ever pay for that we hope we never use. But when you use it, you want it to be what really good. So
I feel the same way about life insurance. So.
yeah, well, life insurance you will eventually use it though. There's no getting
Yeah, I
around
know. I
that.
was playing. So what makes Texas special? Because I agree, Texas is. I mean, Florida's special for the hurricanes. California is special for earthquakes. What makes Texas special?
So where we invest, which is North Texas, is right down Tornado Alley. Tornado Alley is like West Texas, North Texas, into Oklahoma and Kansas. And I mean, there's a reason why Dorothy had a tornado come in and send her off to Oz. It's because tornadoes happen in the area. Um, so tornadoes do happen here, and so they don't happen that often. But what they do bring is a lot of high wind and hail, and that damages a lot. So wind and hail damage is huge. So much so that in Texas, wind and hail has its own deductible. So if you have a fire in a property, your deductible might be 100,000. But if you have wind and hail damage and you have to replace a roof, your deductible might be 250,000. So
Something that we ran out of time with talking with JT. One of the differences in the past few years is the concept of named storms. They've started to name winter storms, not just hurricanes, but now like snowstorms or winter storms are being named, and you have to have insurance on named storms, right?
I haven't heard of winter storms being named,
Oh yeah, they are. They are in New England now. So yeah,
I'm like I said, I'm in North Texas, and our winter storms come.
easy come,
Well,
easy go.
we our worst winter storm that I've seen was in 2021, where like all of
Yeah.
Texas was under a freeze warning. But where I am, we get snow maybe once a year, where we have to cut school. So I haven't heard of the name storm thing, but that would have actually been a good question to ask him. I can see it in like the Rockies or New England or the
Yeah.
Pacific Northwest, something like that.
So what are you projecting right now for insurance increases as you're underwriting?
So from past experience, I've seen insurance increase 10, 20% year over year, but mainly because of that 2021 winter storm that I was talking about.
Yep.
There's a lot of damages that happen that insurance companies have to pay out for. That caused a lot of insurance companies to leave Texas, and so the market got smaller, and so it was they could pretty much charge whatever they wanted. But now, and what JT said last week was these insurance companies' coffers are starting to build back up, so they can start bringing their premiums down, and they're starting to move back into Texas because he was saying these companies left Florida for legal purposes. The laws down there have been causing insurance to do funny stuff, but they're coming back now. And actually, we saw almost what a 40% decrease in
Yeah,
insurance this year over from last year.
that was a good
So
surprise. We've had bad surprises. That was a good surprise.
So typically we get a quote for a property, and this property say it's like 68, 65,000. I think last year was 69,000. This year I get a quote for 72,000. It's like it's no big deal. It's right in the ballpark. It's still climbing and whatever. It's like, all right, we can handle it. So waiting for the next quote on our other property. And then I look at the quote again and I realize that 72,000 was for both properties or for two properties. And I was like, holy smokes. And I mean, it was such a change to say, hey, is this for real? And he says, yeah, that's actual. And it's like, okay. So it went from like 69 down to what 37 or something like that.
Yeah.
So we are seeing a decrease, which I would not have predicted and I would not have put into my underwriting. I always prepare for the worst, and anything that's better than that, I feel is gravy. So, one
I
thing
mean,
that go
yeah,
on.
tell a story. I was gonna ask you the question.
Well, I was going to say one thing and I mentioned before. You need to tell your insurance broker everything so they can get you the most accurate quote. Whenever an insurance inspector comes and inspects, they're going to give you a list of items that need to be fixed or repaired. Whenever you've been doing this enough times, whenever you go do your due diligence on a property, you will start noticing the things that you had to repair on another property because you're going to have to do it again.
Do you
So
think there's ever a
what?
time where the actual inspector comes out and they don't have anything to upgrade or to change?
I mean, it depends on what asset class you're investing in, or your if you're investing in Class A's, probably not, or that they won't have anything. If you're doing B's and you're up on your deferred maintenance, you may or may not have anything. If you're Class C, you will probably have something that needs to be taken care of. Um, and even though you're using the same insurance broker year over year, you're not always using the same insurance company. And so one company might say, "Hey, you need to put these, or the railings are too far apart. The bars and the railings are too far apart. You need to fix that, make them smaller." But then another insurance company, you might have railings that are like 3 times what the other one was, and they'll be perfectly fine with it. So I mean, it all depends on the insurance company. And it's like I said, you might be using the same broker, but your insurance company changes, and so you don't really know what they're doing. But going back to your due diligence, say, hey, we had to put these bars in the railings because our railings were 5 inches apart and they needed to be 4 inches apart. And then you go and walk a property and you see railings that are 7 or 8 inches apart. You're like, all right, we need to plan on putting bars in between these railings because we don't want to get hit with it again. So when you get a list from insurance on what you need to do, you don't always plan on it for your capex, but whenever you're doing your due diligence for your next property, you can put what you've learned previously into your capex.
Well, and it's going to affect your offer.
Yeah, it'll affect your offer. It'll affect your capex budget. So that's where experience comes into play. And if you don't have the experience, you want to find someone who does, someone who's been through it. And this is where a mentor or even having an experienced broker, a broker will know what you will need to do depending on insurance and stuff too. So, but it's like, yeah, every time I go walk a property now, I think back to all the changes that insurance made me change whenever we got insured with a new company. It's like, all right, we need to change that. We need to change that. So,
Yeah, but it's different based on insurance carrier too, and it's different based on who walks the property. Um, like you're saying, you definitely have to use your experience to um, guess what the insurance company is going to need you to upgrade and to improve. But there have also been times where we haven't felt that anything needed to be done, and in the end, they really didn't have much of a list.
yeah. Typically, when you get a list, it's these things are good to do and these things are
Must.
required to do.
Yeah, yeah.
Um, if you do everything that's required, you're going to be insured. If you don't do it, you have like a timeline. You have 30, 60, 90 days to get everything done. If you don't do it, you lose your coverage. If you lose your coverage, your bank finds out, and then you lose your loan, and your loan is due, and then you go into foreclosure, and bad things happen when you lose your insurance. So you always do the required. If you do what's suggested but not required, a lot of times that will help reduce your premium. Um, it may or may not reduce or may or may not pay for itself. But it will typically reduce it. So,
And that doesn't mean you won't do it.
yeah. And just because it's required this or not required this year doesn't mean next year when laws change, it might be required again, or maybe their exposure is a little bit higher that they want that to be fixed before they insure you. So insurance is funny. It's all about statistics, um, and risk exposure, and what's the probability of this happening versus probability of that happening. And if they see a lot of things happening statistically higher than normal, then they'll like, all right, you need to fix this because our risk exposure is higher. So and JT said that you can geek out into a lot of those formulas and stuff like that because of how they calculate everything. So I'm not going to get into that because one, I'm not an insurance broker or a company. I just know what I have to pay for.
So just to reiterate again, what are you currently underwriting for annual insurance increases? Are you doing 10%, 12%, 15%?
So typically I so whenever I do my underwriting, a lot of times I'll do like general expenses. I'll do like 3 to 5% per year. Insurance, I will do 7.5 to 10% on that alone. I'll do it higher. Um, I mean, really, nobody has a crystal ball, but the insurance is one of your most expensive expenses. It's the one of your highest expenses, that and taxes, that you can't control. So if you have more toward that in your budget, then you'll be better off. But like I said, our first increase went up like what 20% or so, and if I
Yeah, it
budgeted
was
for
painful.
10%, we were still coming short.
Yeah.
But over the course of 4 or 5 years, it actually averaged out just because we had the significant reduction now. So but typically, 10% is what I do depending on where you are. If you have cheap insurance, if you're in Idaho, maybe not 10%. Really, it's the likelihood of storms, wind and hail, all of the things that we mentioned before. So
I'm just thinking about how every state's different. For example, there are some states, not that many, that you can't underinsure. They require you to have full replacement coverage on everything. It's a state level thing. It's like, wow. So I mean, if you have an older building, they won't let you get ACV, um,
what's
cash value.
ACV?
I forget what the A is, but it's cash value, where you don't need to replace the whole thing like a roof. If you already know that your roof's 10 years old, you're not expecting a full replacement of a brand new roof. You're expecting to have some money to get a piece of the replacement.
So
But if you
it's
have an old building with low rents, yeah, they want you to have a full replacement of $20 million. That's a problem.
so with like the roof, it's like you've used half of its normal life period, so they'll only give you half of what it would be to replace the whole thing, type thing.
Yeah, actual cash value. It
Okay.
it factors out the cost of depreciation, the age, the wear and tear.
Okay. Um, Insurance, regarding insurance claims, I personally have never done anything on commercial property, so I have no experience. Um, my
I've done it
only
before. I've had to make some choices. Sometimes we've said no, don't bother.
to them making a claim.
Yep, and we've been denied before because they said the roof was too old, stuff like that.
So when you decline making a claim, did your premiums go up because of you even talking to them about it?
We didn't talk to them directly, so that one we did not have a problem.
Okay.
We just
Getting
looked up in ourselves what our deductible was and how much we thought that it was going to go up. We recently had an electrical problem at a 6 unit, and we ended up doing the $50,000 upgrade ourselves instead of filing a claim.
when you're looking at a multi-million dollar property, you are looking at six-figure deductibles. You're looking at 100K deductible, 250K deductible. Yeah, you can buy those deductibles down with a higher premium, but it's not like single family home insurance where you have a $1,500 deductible and you're trying to replace a $10,000 something or other.
Yep. On our home insurance, we actually just moved up the deductibles because I think I had one that was $1,000 deductible.
Yeah. And actually, I think it's from what I experience, it's typically the reverse. You have $100,000 deductible and a $1,500 fix just to get it done. So you don't even bother with insurance because we had a kitchen fire once where like the vent hood caught fire or something.
Oh yeah.
Remember that?
Yep.
Fire department came out. It was on the record. Um, but it was like a $1,500 fix, $1,200 fix. We replaced the vent hood. We didn't even have to replace drywall. We just had to clean it up and paint over it again. It was super easy, but it we had an inspector come in and he wanted to see the burnt unit. And so like, what burnt unit? It's like, well, there's a fire in whatever last April. It's like, yeah, that was just a vent hood that caught on fire. So we went and showed him, but it's like he was, I think, expecting a big old burnt up unit. But,
Crazy.
yeah. So stress testing insurance. So you get an indication. Typically, I lean toward the higher side of the indication whenever I underwrite. So that's one form of stress testing. So, like I said before, you might get an indication from 76 to 96 or whatever thousand a year. I generally lean toward 96, just in my basic underwriting, just to see what it'll do. And like I said, if anything's less than that, then it's just gravy because it can only improve your numbers. Um, but if you wanted to go more, wanted to have a whole bunch of sensitivity studies and stuff like that, you can probably underwrite for average, and then you can use your extreme as your sensitivity studies. So you can say, hey, this is what we can get, or this is what we're projecting. This is what we could get if it's a worst case, and this is what we can get if it's a best case. So there's lots of ways you can do that. But typically, like I said, I just put in the worst case numbers right off the bat and don't worry about anything else. So, oh, another thing that we talked about with JT, and I do highly recommend going back and listening to that episode if you missed it, is you cannot shop around for insurance. No matter how many times people tell you you need to shop around, you cannot do it.
Your broker can shop around for insurance.
Your broker can shop around, but you personally cannot. If you shop around, you're shopping around for a broker. And he was talking about if you have company A, B, and C for the best, property insurance, umbrella insurance, and general liability, and then you go to another broker, they might have to go to different companies because they lock themselves out because there's already a broker on file for that property in question. So
I've signed before to open up the broker on file, by the way, but it's not easy to do.
yeah, you have to write a letter saying, hey, I'm releasing this broker on file and I'm putting in a new one.
Yes.
And then that will open it up, but that basically kicks out the previous broker and puts in the new one. So that's what you do when you fire a broker, basically, because when you do that, they don't tend to look good about it.
I know what you're saying, but when you have an insurance premium that's twice what you can afford, and you're still gonna, we still kept the original broker, but we just wanted the option to open up to view everything with a second set of eyes.
Yeah. And sometimes when you write that letter, because it always goes back to the previous broker, it lights a fire under them and say, hey, well, maybe I need to try a little bit harder because these guys are about to replace me. So there's nothing that lights a fire under a broker's behind better than thinking they're going to get replaced. So
there you go.
Anything else on insurance? And
no, like you said, you start with a number, you get a real number, maybe like a soft quote from your broker, before you do anything else.
Yeah. And like I said, if you have a rent roll, a T12 and an OM, that's what you do when you kick off your underwriting. Just send forward it to your broker and they'll get you insurance right away. So you don't have to do anything else on your own. So in the next episode, we'll probably talk about, we sort of talked about it with JT, different types of insurance, why you need them, when and why you need certain ones. But like I said, it all falls back to your broker. If there's one takeaway from all of this, it's have a good relationship with your broker. And that's pretty much it. So,
Yep.
If you want to learn more about underwriting insurance, you can look me up. I'm on LinkedIn. I'm at ironcladunderwriting.com. I have a lot of free resources there. I have a masterclass you can watch. LinkedIn, Facebook, Instagram. Frank's LinkedIn, Facebook, Instagram, all of the above. And we'll catch you next time. Bye. And that's a wrap for this episode of the Ironclad Underwriting Podcast. If you got value from today's conversation, make sure to subscribe, rate, and share the show. And don't forget to connect with us on LinkedIn, YouTube, Facebook, Instagram, or check us out at our website at ironcladunderwriting.com for more insights and updates. If you have a question, a deal you're analyzing, or a topic you want us to tackle, shoot us a message. We'd love to hear from you. Until next time, keep your assumptions grounded, your models sharp, and your underwriting ironclad.